Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at some more of the marijuana sector, cannabis sector stocks. Okay, so first up is ticker symbol NBEV. This is New Beverage. So yeah, it's trying to break resistance right now. It's trying to break above 9. 9 is the huge level to break. That's the closing price zone right here on the first trading day of October. You can see it hit that level and broke above intraday, but it pulled back below. It's going to need to close above to head higher. Now on Tuesday, you had the bearish Harami reversal pattern that formed. That pattern has not been confirmed, but a doji did form today after a gap up open. And so during an uptrend, when you have a doji that forms, especially after a gap up open, many times that'll signal a temporary top. So we'll have to see if it pulls back and takes a breather with this pattern. You know, failing to trade above 9 will be a red flag. It's at a flex point now. It's either going to break 9 or it's going to drop below EMA 4 at 784. If it breaks that pink line and drops below 784, it could come down and test the top of the gap here. There's a gap between high of day on the 28th and low of day on the 1st. And so 650 just about it is the top of the gap. If it were to break below 650, it could possibly fill that gap. And so yeah, that would be, you could see over here there was a gap, and that gap ended up filling after the pullback. And so it's likely at some point that this gap does fill. And so on a pullback, you'd want to see EMA 13 at 599 hold. Okay, let's look at IGC here. So yeah, down another 35% today after a big down day tomorrow. So it's been in a very strong 2-day pullback. RSI needs to stay above 50 now that it's down here at 55. You've got a bearish crossover here on ADX with the green line crossing over the black line to the downside. When +DI crosses over ADX to the downside, it signals the bears are taking over, similar to how you had a crossover here. Notice how this crossover was lined up with right here, and that signaled the start of this run. Well, the opposite of that is when you have a bearish crossover. The last time you had a crossover was right here, and then you could see what happened. Okay, so this is the downside risk here. So you see after the crossover, look what happened. Okay, so now you have the bullish crossover, big run, and now you have a bearish crossover, and it's pulling back. And so yeah, that's the risk, is a multi-day pullback. You know that okay, so first off, there was a gap right here between these two candles, the first and the second, and that did fill yesterday. And bearish 3 gap ups reversal pattern had formed during the uptrend, and so that is a very strong reversal pattern. It's one of the classics. It did get confirmed yesterday, and then now today it's dropping lower. There are 5 unfilled gaps in this chart. There's one little tiny spot down here. It needs another penny to fill this gap, but there's 1, 2, 3, 4, 5 unfilled gaps in this chart. So that's all potential targets for market makers in the future. Just something to keep in mind. It's always scary getting too bullish on a stock that has lots of unfilled gaps, especially if it's a penny stock. And so right now it needs to hold the top of the gap here that's bouncing off of that level. If it drops below, it could come down here and fill the gap. A drop down to about 575 would fill that first gap. Keep in mind, many times a downward gap fill can be a catalyst for a technical bounce. You can see it didn't get a bounce here off of this one. If it were to break below that bottom of the gap level, that would be a red flag, and that would put the middle Bollinger Band at 359 on deck. Okay, let's look at Neptune here, ticker symbol NEPT. Yeah, and to get the reversal going, in order for this to, sorry, I was pretty bearish on all that, to turn positive now and get bullish, what it has to get back above EMAs 4 and 8, the lime and pink lines. Once it's above this pink line at 765, that's when it can get cruising again. That's when the bulls can take over. Similar to this candle right here, you can see on this candle the candles dropped below the pink line, and then and that's when it headed lower. And then here it got above the pink line and it's running higher. And so now that it's below, it's signaling downside risk. Okay, let's look at NEPT here. Okay, so it's trying to hold up. It's in a sideways channel. If you checked out the last video that I showed or that I posted just a few minutes ago, you had Cronus Group, and you know, you've got Tilray. You've got several stocks right now that are either breaking down, canopy growth in a sideways channel. And so this channel, right, this pattern here for NEPT NEPT is very similar to canopy growth. It's got the sideways channel going. It needs to stay above 50 on RSI at 53 there. You want to see a bullish crossover here on fast O. This is a red flag. That's the bearish crossover I was just talking about. So it is signaling downside risk, having that green line cross over the black line to the downside. You can see this is a sideways channel. Up here, this is the top of the channel, and then down here, you've got the bottom of the channel. And so in a sideways channel, if you want to trade a sideways channel and you're bullish, the key is to load off the bottom, and then you sell off the top. And so right now the load would be down here in this 380 zone, and then the sell is up here in the 480 zone. You know, you've got a dollar spread between the bottom and the top of the channel. The middle of the channel is where it's at right now. The middle Bollinger Band at 418 is the line in the sand. It's trying to hold that level. If it could stay above, you know, it could push higher. But the bottom line is this is not going to break out higher until it busts through the top of the sideways channel, which is up here around 470. And it's you know, the downside risk is if it failed to hold this 380 level, it would drop lower. The downside risk is if the middle Bollinger Band fails to hold at 418, it could come down here and test that 50-day simple moving average at 364. So yeah, during the sideways channel, you know, if you are you know, you could get stuck riding, you know, just holding during the channel if you're you know, because there's not a lot of trades to make either, you know, unless you're loading off the bottom and selling off the top, or you're shorting the top and covering off the bottom. So many times it's best to avoid a sideways pattern until there's a clear signal that it's either breaking out to the upside or it's coming down and bouncing off of a key support level. You know, it's kind of no man's land when you have this kind of action. Okay, so let's look at HYYDF here. Okay, so this is Hexo Corporation. This is another one of the beverage makers, cannabis beverage makers. And so, yeah, so they're in a sideways channel as well. See RSI's down here at 61, Fasto's at 52. So they cooled down, they dropped down below, you know, drop below 70, drop below 80. They both need to stay above 50. It would be a red flag if they drop below 50. You could see this had the bearish crossover right here on ADX, and it's been going sideways ever since. That green line needs to break above the black line to signal that the bulls are taking control. Right now, it has a very similar pattern to NEPT, where it's trying to hold that middle Bollinger Band. Right now, that middle Bollinger Band is the bottom of the channel, and the top of the channel is up here just above 680. And so you've got this 625 or so to 680 zone. The middle Bollinger Band is right now at 633. If it were to drop below that level, that would signal downside risk. It has to stay above this middle Bollinger Band right now. It has to keep closing above 633. If it were to close below, the downside risk is that lower Bollinger Band could get tested at 556, or it could come down here to the 50-day simple moving average to test support. And it does look like there's a micro unfilled gap right here between low of day on this candle and high of day on this candle. So the downside risk is if that middle Bollinger Band fails to hold and it drops below 630, it could come down here and test that 50-day simple moving average. And if it does that, it's very, you know, pretty much you can count on this gap filling. If it starts coming down this way to hit that 50-day simple moving average, look for that gap to fill. A downward gap fill would be a good catalyst for a technical bounce. Now to the upside, if it breaks out above 680 and closes above that level, that's going to be your clear signal that it wants to break out higher. These stocks could very well break higher. It's just when you get this sideways channel, it's just, if you're a trader, they're no good. This is no good for trading. You know, you're just sitting here and holding. The whole time, if you bought, like, let's say you bought over here, and you know, you're like, yeah, this is going to be great. I'm going to buy into this thing and it's going to take off. And look what it's done. It's just gone sideways. So every single day that it's been doing this, you're missing out on other opportunities. So that's the thing with trading. With trading, you want to be liquid and you want to find the good charts that are moving either up or down and you're on the right side of the trade. Sideways channels are no good for the day trader or for the short-term swing trader. Okay, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. And the premium chat is where it's at. We'd love to see you there. Thank you.